Hi, my name's Phil. I like talking about politics, and in this video I'd like to discuss how the Bank of England seems to be increasingly panicked by EU moves to bolster their own competitiveness at the cost of the UK. Imagine that. The Brexiteers unilaterally chose to be a competitor with the EU. The EU is competing, and now the Brexiteers are whining. But first, if you'd like to be notified of daily news in politics, please subscribe to the channel and click the bell notification icon. So Andrew Bailey, Governor of the Bank of England and a Brexit supporter. Now, I don't know whether that's his considered view or whether he just publicly backed Brexit for advancement, but he's a publicly backing Brexiteer. He is now complaining that the City of London is expected to lose between 25 and 89 trillion pounds in European derivatives over the next year. The reason he says over the next year is because the equivalence agreement, the temporary agreement that is in place, is supposed to expire halfway through 2022. And the laughable part of this is that the European Central Bank had tried to take away these from the UK before, about 10 years ago. After all, those who use the euro weren't too keen on the currency being traded by a large financial centre outside of the eurozone to a large degree. Basically, 90% of this business is currently handled in London, according to the Financial Times. Now, it was argued that they should be retained in the eurozone, and as the UK wasn't going to be part of the eurozone, shouldn't actually be involved in anything that could impact on the euro. However, we were still members of the EU and the single market, and the European Court of Justice agreed that we had the freedom to handle them. But of course, we don't like the single market, or when it comes to it, the European Court of Justice. And so now we've lost that protection as EU members and waved goodbye to another huge chunk of business. And we're not messing about here. None of this hundreds of billions of euros disappearing over the Brexit border this time. No. That's small change. Tens of trillions. I don't even... Tens of trillions! But okay, this is what Brexit cost. Let's just be sanguine about it. Actually, no, that's not what they're doing at all. Brexiteer Governor of the Bank of England is howling like a banshee over this and saying that he will resist it. Oh yes. How exactly? 10 years ago, they resisted it by going to the European Court of Justice and staking their claim to freedoms guaranteed as EU members. It worked. What are we going to do now? Sweet FA, that's what. No, worse than that. We're going to shout and scream and stamp our little feet like spoilt brats in the supermarket because we're not allowed the lolly, whilst being able to do nothing about it, making us look weak and impotent as well as stupid. Thanks for that, Brexit. That was what was missing from all our lives, looking weak and stupid at the same time on the world stage. Global Britain. Ironically, there was a little bit of a spat regarding derivatives last year, I seem to recall. Had to look it up again. So the Financial Conduct Authority, this was just after Brexit. This was like Brexit first version, where we left the EU. We were still in the single market, but we'd left the EU. And the Financial Conduct Authority was accused of being slow to implement new rules. And they argued that they wanted to be careful about it as a clumsy application could disrupt trading. Well, I think it's fair to say that trading is being pretty badly disrupted now. And for me, who is not intimately familiar with the world of finance, to read reports of the FCA normally being very robust in applying new rules and regulations, taking a tentative approach for fear of disrupting a sensitive area of trade, would highlight for me just how important this area of trade is to the UK's financial sector. It seems they needn't have bothered. It almost feels like someone being careful to get the microfiber cloth to polish their car rather than the cheap dishcloths in the kitchen, only for their partner to come out and finish the job off with a power sander. And do you know how the Governor of the Bank of England, Andrew Bailey, has described this? He's described it as the EU trying to poach business from the City of London. I think I've got a few things to say about that, Andrew, my old son. One, we chose to set ourselves as competitors with the EU. Everyone who publicly argued for Brexit, regardless of their private feelings, anyone who publicly stood on a stance of, yes, Brexit, leave the EU, and I don't just mean leaving the EU, although it inevitably did set us up in competition, but we chose specifically to leave in the rudest manner possible with as few ties as was politically possible to maintain. We deliberately chose to set ourselves up in opposition to the EU. So we do not get to whine when the EU takes up the gauntlet. Oh, it's a competition you'd like, they say. Second, this particular example is the countries who use the euro taking back control over their currency. Now, could you imagine if the boot was on the other foot? Could you imagine what Brexiteers would have to say, the Daily Express, the Daily Mail, at the prospect of a foreign financial centre controlling our currency? This is a level of influence that not directly us, not our influence, but our financial markets influence have had over someone else's currency. And guess what? The second they could, they wanted that control back. And so over the next year and a quarter, that is going to be pulled back. And the third thing to say is, frankly, suck it up. This wasn't imposed on us. We chose it. Bailey must have known what was going to happen. He is, in fact, one of that rare breed amongst the Brexiteers, an expert in his field. He's not a clueless Tory MP who just goes through whichever door they're told to by the chief whip and then off to the House of Commons tea rooms for a subsidised dinner. He was briefing a committee of MPs this week and tried to suggest that the EU moves were a recent development. Oh, the EU have started doing this thing. If an economist, a genuine economist, couldn't see this coming from a country mile away, then should they really be the governor of the Bank of England? This just sounds like sucking up to the government to me and trying to persist with the line that the universal disaster that is Brexit has come as a complete surprise. I say universal disaster, I mean for the UK. Obviously the major financial centres in the EU are having champagne for every breakfast right now. And things are getting more desperate. I remember when Bailey first started to express concerns about equivalence not being granted a few weeks ago for most financial services. He tried to suggest that not granting equivalence would actually harm the EU. Oh, yeah, you're only harming yourself, you know. That didn't seem to work though. It turns out that this massive global trading bloc that manages its own currency knows quite a lot about what's good for their financial services operations. They have decided, actually, you know what, we think we're doing quite well here. There seems to be quite a lot of business moving from the UK to the EU. I think this is good for us. So that hasn't worked. So now what he seems to be doing is trying to con them against their own interests by suggesting that moves by the EU will increase tensions. Now, a couple of things that spring to mind at that statement is, one, we have a governor of the Bank of England, someone who is supposed to be an apolitical official, making political statements. Now, it was one thing to try and claim that the moves would be harmful to the EU. That's an economic statement, almost certainly a false one, but nonetheless, it's an economic assessment by an economist. Fine. Saying that the moves will increase tensions, however, is a political statement. This makes it sound to me like there are serious worries here. I mean, any sector of our economy negatively impacted by Brexit would, of course, be worried, which actually I think is most sectors of our economy. But this sounds like a level of desperation now. Though how they expect to get the EU to change their mind by telling lies that are only fit for the pages of the Daily Express, I can't imagine. It's like these Brexiteers have learnt nothing. All through last year, they were constantly saying things that absolutely will be believed by people in the UK who had no more say once we weren't in the EU anymore. It's not going to work on the EU themselves. And the second thing that occurs to me is, as massive as our financial centre is in the UK, it looks like it's going to shrink much further than originally anticipated. I obviously can't comment on how much, but I noticed there's no talk about replacing this lost business with a New Zealand trade deal, like the bollocks the government try when explaining away our loss of trade in goods. Oh, you know, oh yeah, well, okay, we can't sell as much to the EU. Yeah, it's really bad. But don't worry, because we're going to join CPTPP and then we'll be trading with New Zealand and Canada and all the rest of it. It'll be marvellous. Marvellous. There's none of that. None of that crap. What I'm getting from these accounts and reports is that we're putting our hopes into trying to convince the EU to let us compete for their business, but for them not to compete for ours. I'm not entirely sure it works like that, if I'm completely honest. And in terms of the importance of this, let us not forget that come what may, this is a sector of our economy that contributes 1/10 of our tax receipts. And we have a government that aren't all that keen on raising taxes elsewhere to make up a shortfall in lost tax revenues. I mean, we saw that in austerity with David Cameron. You know, his austerity plan completely backfired, as they all do, because he didn't realise that actually, if you set a budget based on the tax receipts the Labour government were getting, but you put in policies that mean massive unemployment, your tax receipts are lower. So then you have to raise taxes elsewhere. Oh, but you don't do that. That means you haven't got as much to spend. Oh, that means your economy shrinks even more. Same thing here really, isn't it? But those are my thoughts. Let me know yours in the comments below. Hope you found the video interesting. If you did, don't forget to click the like button. If you'd like to support the channel further, please also click the Patreon link for details. And until next time, I'll see you later.